The trades draining your account never looked bad. They looked A+. They looked identical to your winners. And a single grade is the only thing telling them apart. My first month's trading, I hunted for the prettiest candle that I could find, and I watched my account fall to $20, convinced the candle was the trade. It wasn't. And it took me far too long to see what my winners had that my losers did not. I'm going to hand you the same 3-check grid that I ran before every trade so that you can grade any setup A+ or average in seconds. You already ignore the obvious rubbish trades, so the signals still doing the damage are the good-looking ones that you never had a rule to reject. Paul Tudor Jones called out the 1987 crash when almost nobody else did, and walked away richer the week Wall Street fell apart. And before he even considers a trade, he checks a single line, the 200-day moving average. The 200-day moving average, and it answers a single question: which way is the market really going? If price is below that line, he's out, however good the trade looks. The big direction vetoes everything smaller, and you've sat there, finger on the button, over a beautiful trading candle, while the higher time frame pointed the other way. Here's the grade. Every trading signal you look at gets stamped A+ or average, and there's nothing else. No A-, no nearly. That's the 2-stamp grade, and it runs in a fixed order. Check number 1 is direction, and you score it fast on the higher time frame before you look at anything else. Is the big trend clearly up or clearly down? If price is holding above a fast-moving average that sits above a slower one for a few consecutive weeks, that's a clear uptrend, and it passes. If it's chopping sideways and you have to squint to call it, that's a fail. But most people never score it in this order. The grade is set before the entry candle ever prints. A beautiful entry in the wrong direction is an average trade wearing a costume. People read it as a good trade with a small flow, and that is the trap. So direction is check 1, but direction alone can fool you. You can get direction dead right, price genuinely trending up, and still be holding a trading signal that grades average, because a trading candle can point the correct way and still be standing in completely the wrong place. Your last clean signal that went nowhere probably had the trend right. It rejected perfectly, yet it still stopped you out, and you had no idea what went wrong, because on paper it looked A+. The answer is standing at the edge of a lake in the shape of a man who can't understand why he's not catching anything. He has the best fishing rod money can buy and the most beautiful lure in the shop. Would you look at this lure? It's hand-painted. It cost me a small fortune, and it moves exactly like the real thing. Nothing in this lake stands a chance today. 3 hours later, he's caught precisely nothing, because there is not a single fish in the quiet corner he keeps casting into. And 6 meters down from the bank, a kid with a bent hook and a worm is pulling them out one after another. He's standing over a drop-off where the fish actually hold. The spot was the whole game. A lure only matters once you are already standing where the fish are. Every trader trips up on a different one of these checks, and the free diagnostic quiz in the description below shows you which gate is costing you the most. Get your free diagnosis today with the link below. And there you are at 6 in the morning, zoomed all the way in, admiring how cleanly a trading candle rejected, while price is sitting in the dead center of the range, with no real level within miles of it. Check number 2 is location, and it's the one that just cost you that trade. Before a signal earns a single point, it has to be standing at a major level, and I call it the address test. You ask the candle a single question. Does it have an address? A major level is one of only 3 or 4 obvious lines price has clearly turned at more than once over the last 6 to 12 months. These are the lines you could not miss even if you tried. If your signal is forming right on one of those, it has an address. It's real. If it's floating in the empty middle with no line nearby, it's noise, even when the pattern looks textbook. So say price pulls back into support at 1.2000. A line it bounced off twice. That trading signal has an address and it passes. That exact candle at 1.2170 in the empty middle has no address and you can delete it. And someone profits from you not knowing this. The whole industry sells you prettier candles and flashier indicators because a shiny entry is easy to sell. The boring question of where price actually is makes nobody a cent. No address, no trade. So now you have two of the three. Direction, yes. Location, yes. And this is the exact moment the trap springs. Because now a beautiful candle shows up at your level and every part of you says, this is the one. And that is the moment that once cost me a trade. Two trading signals sit side by side. Same market, same beautiful pin bar, rejecting the same level. One is an A+. One just takes your money and nothing on the candle itself tells you which is which. In September 2018, I'm looking at the euro against the yen on the 4-hour chart, and there it is. A bearish pin bar so clean it belonged in a textbook, with a long wick and a perfect rejection. Everything I had waited for. And in my head, there was a single voice, and it was not asking any questions. That's a textbook signal. I don't need to check anything else. I know a pin bar when I see one. Just sell it before it goes without me. So I sold it. What I didn't do was drag my eyes up a floor to the daily chart time frame, where that same market had just closed strong and bullish above resistance. The big direction was pointing up. My beautiful candle was pointing down, straight into it. The trade did exactly what the daily said it would. It went against me and it lost. The signal was perfect, but the signal was also completely overruled because I never gave the context a vote. And if you've done that, don't sit there beating yourself up. Nobody ever handed you an order to score these things in. You are just staring at the part of the chart that was screaming the loudest. Check number 3 is the signal, and it ranks last on purpose. That's the signal ceiling. The entry candle can only ever confirm a setup that already passed direction and location. It can never lift one that failed them. A perfect trading candle sitting under a failed context still grades average, and average gets deleted. So here's the whole grid start to finish on a single setup. Higher time frame, clear uptrend, and price above a rising fast-moving average over a slower one. Direction, pass. Price pulls back into a level it stand at twice before, say 1.2000. Location, pass. Now and only now, the trading candle. A pin bar rejects 1.2000 and closes back up, and it's smaller than the recent daily range. Say the last 10 days ran about 90 pips and this bar is 60, that's a real turn, not just an oversized bar that's already exhausted. Signal, pass. 3 passes, stamp it A+ and take it. Now, the same beautiful pin bar, same level, but the higher time frame was chopping sideways. 2 out of 3 still grades average. Delete it. Don't look back. And deleting it costs you nothing because your winners pay about twice what your losers cost. So a grade you are right on just 4 times in 10 still comes out ahead. Every average trade you delete is loss you are never going to keep anyway. I don't let a pretty trading candle talk me into a trade. It gets a vote, never a veto over the context. Do that and you stop being the trader who hopes a setup works out, and you become the one who already knows its grade before a cent is on the line. So on the next trade setup you open, run the 3 checks in order and say the grade out loud, A+ or average, before your hand touches the mouse. But the moment you stamp a trading signal, A+, something still decides whether it pays you, where your stop loss goes. put it in the wrong spot, and the market knocks you out of your best setup before it moves. So watch this next, where I show you exactly where your stop loss belongs. See you in that video.